Pantheon AI presents Breaking Down Trends in Artificial Intelligence by Bond. Welcome back to the podcast, everyone. Today, we're diving deep into a fascinating document from Bond, published in May 2025, titled Trends, Artificial Intelligence. It's essentially a comprehensive overview of how incredibly fast AI is evolving, and, honestly, its massive impact.
Yeah, and rapid evolution almost feels like an understatement when you read through it. The executive summary alone highlights that the pace of change with AI is, unprecedented. They even say it's accelerating faster than the internet did in its early days, which is pretty wild to think about.
Absolutely, and it's not just hype, right? They point to a few key drivers. You've got 5.5 billion people globally with internet access now, decades of digital data sets to train these models, and then, of course, breakthrough large language models like OpenAI's ChatGPT, which just exploded onto the scene because it was so user-friendly.
Exactly, and that explosion has led to aggressive investment from tech companies, both the giants and the startups. There's this intense global competition, especially between China and the US, which they really emphasize.
It's a huge theme. But despite all this uncertainty, even potential dangers, the report makes a strong long-term case for optimism. They attribute that to intense competition, innovation, compute becoming more accessible, rising global adoption, and, hopefully, thoughtful leadership.
Yeah, that last part is key, isn't it? So diving into the first big section, seem like change happening faster than ever? Yes, it is. This part really hammers home that foundational premise. Technological change with AI is just moving at an unparalleled rate.
It's compounding, Technology has always given us better, faster, cheaper, but AI is the latest, fastest iteration. Think about the data used to train AI models. It's grown by 260% annually over the last 15 years, and compute, an even more staggering 360% annual growth over the same period.
Unbelievable. And algorithmic progress contributes too, like a 200% annual growth in effective compute. Even AI supercomputer performance has been going up by 150% annually, and the sheer number of powerful new AI models up 167% annually over 4 years. It's just relentless.
It really is, and ChatGPT's growth is a prime example. The report calls its user, subscriber, and revenue growth hard to match ever. It hit 365 billion annual searches in just 2 years by 2024. Google took 11 years to get there back in 2009, and it hit the world stage all at once, globally, unlike the internet's slower diffusion from the US.
That's a fantastic comparison. It also talks about how knowledge distribution has evolved. We went from the printing press, which was static and physical, to the internet being active and digital, and now with ChatGPT, it's active, digital, and generative. 7% of scientific articles in 2023 showed signs of AI involvement, and nearly 7% of global news articles are AI generated by mid-2024. That's a huge shift.
It really is. And they've got this detailed AI milestone timeline that just shows how quickly breakthroughs are happening. Plus, they use ChatGPT to outline current capabilities, but then also project what I will likely be able to do in 5 or 10 years. Things like scientific research, operating autonomous companies. It's just exponential growth in potential.
It's wild. And the trend in AI development is interesting too. Since 2015, industry has really surpassed academia in releasing notable machine learning models, driven by the need for more data, compute, and frankly, money. Developer growth is insane too. NVIDIA's ecosystem grew 6 times to 6 million developers in 7 years, and Google's grew 5 times to 7 million in just 1 year.
That's incredible. And computing-related patent grants in the US just exploded after Netscape's IPO in '95, and then even faster after ChatGPT launched in 2022. It shows the economic impact. And AI performance itself? In 2024, AI surpassed human levels of accuracy on the MMLU benchmark test, and by Q1 2025, 73% of AI responses were mistaken for human by testers. It's getting so realistic, even in images and audio translations.
Right, like Spotify using AI for audio translation to reach a global audience. And the emerging applications are just mind-blowing. protein folding, cancer detection, robotics, universal translation. It's truly transformative. But the report isn't shy about acknowledging both the excitement and the trepidation.
Yeah, it's that dual nature. Benefits like freeing humanity from menial work, accelerating scientific research, even potentially an era of peace and plenty. But then the risks. Misuse like autonomous weapons, surveillance, biased decision-making, job impact, cybersecurity. It's a lot to balance.
Definitely. Moving on to the next big section, AI user plus usage plus CapEx growth equals unprecedented. This really dives into the capital expenditure and adoption rates. ChatGPT's user growth, for example, increased 8 times to 800 million in just 17 months. Its global adoption rate is significantly faster than the internet's spread was.
It reached 100 million users way faster than TikTok, Fortnite, or Instagram. And get this, it hit 1 million users in 5 days. The iPhone took 74 days, and the Ford Model T took 2,500 days, and ChatGPT was free. They're projecting the AI era to reach 50% household adoption in 3 years, which is half the time of the mobile internet era.
That's just mind-boggling speed. And it's not just consumers. NVIDIA's AI ecosystem has seen over 100% growth in developers, startups, and applications. Major tech companies, Microsoft, NVIDIA, Google, Amazon, Meta, they're all hyper-focused on AI. AI mentions in their earnings calls have just skyrocketed. CEOs from Amazon, Google, Duolingo, X, Roblox, NVIDIA all emphasize AI as their top priority.
It's permeating everything. Even traditional enterprises are adopting it. 50% of S&P 500 firms mentioned AI in their earnings calls by Q4 2024. And they're not just looking at cost reduction, but growth and revenue generation. 75% of global CMOs are already using or testing AI tools. Think about Bank of America's Erica Virtual Assistant, or JP Morgan's AI Modernization, or Kaiser Permanente's AI Scribe.
And Yum Brands, with 25,000 restaurants using their Bite by Yum AI system. It's everywhere. Even education and government are jumping in. Universities like Oxford and Michigan partnering with OpenAI, Arizona State's AI Acceleration, and ChatGPT Gov for U.S. federal agencies. Nations are building their own AI infrastructure too, through NVIDIA's Sovereign AI Partners and FDA-approved AI medical devices. 223 approvals in 2023 alone.
That's a huge number. And AI-driven drug discovery is cutting preclinical R&D timelines by 30 to 80%. It's really changing the game. In terms of usage, ChatGPT is being adopted by all age groups in the U.S., with older generations using it like a Google replacement and younger ones as a, quote, life advisor. Daily time spent on the app increased by 202% over 21 months.
And its weekly retention rate is 80%, which is significantly higher than Google searches. Over 72% of employed U.S. adults using AI chatbots say these tools help them do things quicker and better. Students use AI for research, problem-solving, learning, advice. It's automating specialized knowledge work, like, quote, deep research from Gemini, ChatGPT, Grok.
That's the key. AI isn't just chat responses anymore. It's evolving into, quote, agents that can reason, act, and complete multi-step tasks autonomously. It's like the shift from static websites to dynamic web apps. But for AI, Google searches for AI agent are up over 1,000% in 16 months. All the major players are launching agentic products.
And this leads us to the next frontier. Artificial General Intelligence, or AGI. That's systems capable of performing the full range of human intellectual tasks. Expert expectations for AGI have shifted forward, with Sam Altman from OpenAI saying he's confident they know how to build it. AGI would redefine software, drive research, engineering, education, logistics with minimal human oversight, and even reshape our physical environment through humanoid robots. It's a huge concept.
It's massive. And all of this requires incredible capital expenditure. The big 6 U.S. tech companies, Apple, NVIDIA, Microsoft, Alphabet, Amazon, Meta, their CapEx has increased by 21% annually over 10 years, driven by the need for more data centers, network infrastructure, and compute. It mirrors the 37% annual cloud revenue growth of hyperscalers.
And CapEx as a percentage of revenue for the Big Six has really accelerated, hitting 15% in 2024 compared to 8% a decade ago. Amazon AWS's CapEx for AI/ML infrastructure reached 49% of revenue in 2024 compared to 4% for initial cloud infrastructure in 2018. It's like a whole new CapEx cycle is starting.
NVIDIA is obviously a huge part of this. Their GPU performance has increased 225 times over 8 years, and inference token capacity by 27,500 times. Global installed NVIDIA GPU computing power grew over 100 times in 6 years. Their data center revenue is becoming a significant portion of global data center CapEx.
And R&D spend at these Big Six companies is also rising, up 20% annually. They're just loaded with cash, generating $389 billion in free cash flow in 2024. They have the funds to pour into AI. The bulk of AI LLM development spending is still dominated by compute for training and running models, with training costs easily exceeding $100 million per model and rising into the billions. But, interestingly, inference costs per token are falling rapidly.
That's a critical dynamic, actually, which leads us to the next section. AI model compute costs high/rising plus inference cost per token falling equals performance converging plus developer usage rising. The report notes that training costs for frontier AI models have seen approximately 2,400 times growth over 8 years.
But on the flip side, NVIDIA GPUs have seen 105,000 times decline in energy needed to generate a token over 10 years. AI inference costs for serving models dropped by 99.7% over 2 years. The cost efficiency gains are happening faster than with electric power or computer memory historically.
It's the software is a gas principle. As AI models get better, usage increases, which means higher demand for compute, even if the per unit costs are falling. It's Jevons paradox in action, and developers are really driving this. 63% of developers are now using AI in their processes, up from 44% year over year. AI developer repositories on GitHub are up about 175%.
Google's ecosystem saw a 50 times increase in monthly tokens processed, and Microsoft Azure AI Foundry saw a 5 times increase. AI is broadly used in software development for code generation, bug detection, testing automation, project management. It's truly becoming integral.
Which brings us to AI usage plus cost plus loss growth equals unprecedented. This section looks at monetization. The report draws parallels to historical tech disruptions, high initial CapEx, maybe disappointing early returns, and the crucial need for protection against competition.
Right. So in terms of monetization, chips are a big one. NVIDIA's quarterly revenue increased 78% year over year to $39 billion, with data center revenue being the largest segment. Their revenue has grown 28 times over 10 years, and custom chips from Google and Amazon are seeing significant sales growth too.
Then there's compute services. Companies like CoreWeave, a cloud GPU provider, and Oracle, with their GPU-rich cloud platform, are seeing rapid revenue growth. Infrastructure connectivity companies like Astera Labs, 242% revenue increase. Even Tesla's AI training capacity with Dojo supercomputer is up 8.5 times, with potential for sellable service.
And the data layer, Scale AI, for data labeling and evaluation, saw 160% revenue growth in 2024 to $870 million. Vast Data, for storage and management, hit $2 billion in lifetime sales in just over 6 years. But all this growth comes with costs.
Huge costs. OpenAI's revenue grew 1,050% annually to $3.7 billion, but their compute expenses are substantial. Microsoft, Amazon, Alphabet, Meta, they've all seen massive CapEx increases leading to lower free cash flow margins despite revenue growth. It's this combination of high revenue growth, high cash burn, high valuations, and high investment levels.
They call it good news for consumers, but profitability for companies is TBD. Private AI model companies have raised about $95 billion against annualized revenue of about $11 billion, leading to these sky-high valuation-to-revenue multiples. It's a speculative market right now.
Definitely, but new entrants and incumbents are exploring monetization through consumer subscriptions and developer API fees. The AI company landscape is diverse, from model development to infrastructure. New entrants like OpenAI, Anthropic, Perplexity, and Glean are showing rapid revenue growth, reaching 5 million ARR 35% faster than SaaS comparables.
And then you have the tech incumbents like Meta, Apple, Google, Amazon, X, Canva, Spotify, Microsoft, leveraging their massive user bases to roll out AI products and features. Think Canva's Magic Media, Spotify's AI DJ, Microsoft's Copilot, Meta AI, Apple Intelligence. It's everywhere. Microsoft's AI product revenue hit $13 billion, up 175% year over year.
Palantir's U.S. commercial customers increased by 65%. In the enterprise space, there's a push towards horizontal platforms like AI-native productivity and search, and specialized software embedded into specific industry workflows. SaaS incumbents are rolling out AI features within their existing products, but OpenAI is positioning ChatGPT as a potential next-general all-in-one enterprise platform too.
And specialized software opportunities are booming in fields like software engineering, product development, healthcare, legal, customer service, financial services. The report highlights broad emerging AI applications: medical discovery, precision manufacturing, multi-purpose robotics, autonomous scientific research, supply chain optimization, cybersecurity, personalized education, environmental monitoring, energy grid management. Protein sequencing models have seen 290% annual growth in parameters. It's incredible.
It really is. Now, let's talk about the AI monetization threat. The report identifies rising competition, the momentum of open source models, and China's rise as key factors. There's been a significant increase in the release of large-scale AI models across the board: multimodal, language, vision, speech, video.
Yeah, OpenAI's ChatGPT leads in website visits, but DeepSeek and xAI Grok are rapidly rising. The week of May 19, 2025, saw numerous AI product announcements from Google, Microsoft, Anthropic, OpenAI. It's an intense competitive landscape.
And then there's the open source model momentum. We've gone from early open source traditions to proprietary models dominating, and now a resurgence of open source due to lower costs, growing capabilities, and broader accessibility. Closed models still dominate with consumers, but the performance gap is closing, and China is really rising in open source development.
That's a huge point. The rising performance of open source models and falling token costs are leading to an, quote, explosion of usage by developers. Meta's Llama downloads increased 3.4 times in 8 months, and the number of AI models on Hugging Face increased 33 times from March 2022 to November 2024.
And then the geopolitical aspect, China's rise. The report calls it a new space race, highlighting China's accelerated capabilities in strategic sectors like robotics, electrification, and, of course, AI. Chinese AI capabilities are underpinning nationally strategic areas, and their state media emphasizes, quote, indigenous innovation. The implications of Chinese AI supremacy are described as, quote, profound.
Yeah, and the economic trade tensions between the U.S. and China are escalating, especially over rare earth elements and semiconductor manufacturing. China is rapidly gaining relevance in AI, with models like DeepSeek, Alibaba's Qwen, and Baidu's Ernie showing competitive performance, often with lower training costs and increasingly powered by local semiconductors. China's industrial robot installed base is already higher than the rest of the world.
And Chinese consumers are predominantly using local AI platforms, unlike other regions where ChatGPT leads. Interestingly, Chinese citizens are also materially more optimistic about AI's net benefits than their U.S. counterparts. It's a really complex picture.
Absolutely. Next, AI and physical world ramps equals fast plus data-driven. This is where AI moves beyond software. It's embedded in vehicles, machines, defense systems, Think self-driving fleets like Waymo and Tesla's FSD logging millions of driverless miles. Waymo autonomous vehicles achieved 27% share of San Francisco rideshares in 20 months. Applied Intuition is serving top automotive, trucking, construction, and defense sectors with vehicle intelligence.
Anduril, a defense tech company, doubled its revenue year over year for the last 2 years with AI-enabled autonomous systems. AI is even transforming mining exploration, with Cobalt Metals using it to identify prospects more effectively. And agriculture, like Carbon Robotics Laser Weeder, which has weeded over 230,000 acres and prevented tons of glyphosate use. Or Halter, using AI-driven collars for livestock, seeing 150% net new collars contracted year over year.
That's such a tangible impact. And then global internet user ramps powered by AI from get-go equals growth we have not seen likes of before. Low-cost satellite internet, like Starlink, is bringing the 2.6 billion people currently offline online. And these new users are likely to start with AI functionality and in their native language, potentially skipping traditional browsers and search bars entirely.
That's a huge shift in how people will first experience the internet. Global internet users have shown epic growth over the past 33 years, reaching 68% penetration. ChatGPT's mobile app hit 530 million monthly active users in 23 months, with global growth, especially in India and the US. And DeepSeek's mobile app hit 54 million MAUs in 4 months, concentrated in China and Russia. Starlink, with over 5 million subscribers, is playing a huge role in unlocking this access.
It's truly reshaping how we access and interact with information. Finally, AI and work evolution equals real plus rapid. AI is leading to cognitive automation, where AI systems can reason, create, and solve problems. AI's cognitive ability has improved from high school student to PhD candidate level in just 3 years.
That's a wild jump. The document suggests a shift where a unit of labor could move from human hours to computational power, with humans pivoting towards oversight, guidance, and training of AI systems. AI's impact on business is diverse and broad. Companies like Shopify and Duolingo are adopting an AI-first approach, making AI usage a, quote, baseline expectation and fundamental skill for employees.
And AI adoption by U.S. firms is rising, with about 7% of companies using AI in Q1 2025, a 21% quarter-over-quarter increase. AI is leading to productivity gains, as seen in customer support and scientific fields. AI job postings in the U.S. increased by 448% over 7 years, while non-AI IT jobs decreased by 9%. AI-related job titles increased by 200% over 2 years. Apple alone has over 600 open generative AI job postings.
Historically, technology cycles have led to both labor productivity improvements and job growth, so there's hope there. NVIDIA CEO Jensen Huang has this great perspective. He suggests people won't lose their jobs to AI, but to somebody who uses AI, emphasizing the opportunity to, quote, close the technology divide and increase global GDP by putting more workers back into the workforce. It's about adapting.
That's a really important distinction. So to wrap it all up, the overall standing out points from this bond report are pretty clear. The unprecedented pace of change, that's the core message, right?
Absolutely. It's reiterated everywhere. And ChatGPT as a benchmark, consistently used as a foundational indicator for AI adoption usage and market impact. It highlights its rapid and global spread.
Then there's the capital intensity. The massive, accelerating capex by tech giants and the high cash burn of new AI entrants just underscore the significant investment needed to compete.
And the dual nature of AI economics, the tension between rising, extremely high training costs and rapidly falling inference costs. That's a critical dynamic shaping the AI business model.
Right, and then developer-led growth. Developers are at the forefront, leveraging decreasing costs and improving model performance to build new applications and tools. It's their playground.
And the geopolitical competition. The AI space race between the US and China is a major theme, emphasizing its strategic importance for national influence and China's rapid advancements.
Then AI's impact on work. It's a nuanced view, suggesting a shift towards cognitive automation and a future where humans train and oversee AI, leading to increased productivity and potentially new types of jobs.
And finally, the physical world integration. AI isn't just software anymore. It's increasingly embedded in physical assets, transforming industries from transportation and defense to agriculture and mining. Plus, the new internet access powered by AI and satellite internet is poised to bring the next wave of global users online, fundamentally reshaping that first experience of the internet.
It's a lot to digest, but it's clear. AI is not just a trend. It's a foundational shift across every aspect of our lives. What a report.
Indeed. Thanks for joining us for this deep dive.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.